What is going on, YouTube? Welcome back to another video. It's been a while since I last posted, but I don't do this full time, and maybe one day I hopefully can. But I started a new position in Adobe, so I thought, why not make a video, get it out there, and just kind of go over my bull thesis for this company and for this stock because I do think it's undervalued. So before we get into it, I just ask one thing: just give the video a like. It helps push the video out. And like I said, hopefully I can do this full time for you guys. But for everybody that's coming back and watching the video and staying with me, I appreciate you. So let's get into it. So I like to personally think of this as kind of a content creation trade, if you want to call it that. Aside from this company, I do think it's undervalued. The market's not seeing something in this stock. And yeah, I know I said that I was doing a lot less buying and kind of just more selling over the past few months, and I was. I freed up a lot of capital from positions that I bought, a year, 6 months ago, etc. And I think this is one that I think in a year from now, maybe even a little bit sooner, that I'm going to be very happy that I started a position in this. So to be honest, I was thinking about starting a position in Adobe a while ago. I would say probably almost 6 months ago, I was looking at this company, and I didn't pull the trigger, but kind of worked out because I got a better price point. So I'm in at like 330, 331, and I'm willing to keep buying it if it continues to go down. So where Adobe's at right now. So this is kind of just a 3 month chart. Not going into like technical analysis or anything like that, but it's at a low point right now, and it's kind of struggled since the 2021 highs. It kind of never recovered since those highs, and there's reasons for that. Couple reasons, right? I think one, the big one, is artificial intelligence, and when that kind of launched, that kind of scared investors and in the street to kind of think like Adobe's going to get washed out by artificial intelligence and all these other companies like OpenAI. Google came out with Gemini, and there's a lot of other companies as well that are coming out with these models where, you know, you can edit a picture in literally seconds and not have to go on like Photoshop per se, right? Back in the day, if, I remember 10, 15 years ago, if somebody was really good at editing photos, and to be really good at editing photos, you would have to go through Photoshop, right? But again, there's still a bull case in here, I think, with Adobe. So when you look at Adobe, so right now they're sitting at about $138 billion in market cap. And there's really two sides of this business. There's the digital media side. So think of this as, this is their content creation side of the business. So like think Adobe Photoshop, think of Premiere Pro, which is by far probably the best editing software there is for content creators, whether it's individual or at the business level. And then there's like Adobe Acrobat, so like the PDF files. So pretty much I think everybody has had experience with using something on like that side of Adobe's business. And digital experience is more so like their enterprise, so like B2B. Real quick, digital media, right? The way that they make their money off of that is by like subscription services, and then digital experiences, enterprise level. So they're really doing B2B, and they get paid by like contracts. So I forget like the exact products that they have on the enterprise side. I've never had experience using it. Right? So like small, medium, and large businesses use these things to kind of like just track, like people visiting their websites and stuff like that. But that's more so the enterprise side, so business side. But digital media is the biggest part of their business right now, and I think content creation as a whole, right? I think like the whole thing is not only individuals, like, right, I think the whole, you can kind of see since COVID, content creation has really ramped up from just with everybody. Like everybody wants to be a content creator. There's a lot of people that aspire to be a content creator, especially like the younger generations on the come up. So not only are you going to have the individuals want to get more into content creation, right? They're going to use Adobe's, platform. But then you look at the enterprise business, right? And the business side of things. Businesses are going more towards content creation. It's not just individuals in general. It's just businesses in general, right? So like even small, medium, or large, it does not matter. All companies are going more creative. They're focusing on content and they're going to use Adobe's platforms, right? And you can look at individual use cases like, it's different. If an individual needs to go like make like, I don't know, a postcard real quick, like a quick design for that, they can go on Canva and use that, right? Like that's kind of what that website's for. So yeah, they're a competitor, but again, not the same level, not the same scale as Adobe. Adobe is the best of the best. They have the best software out there for, when it comes to creative. And then there is a competitor that came out and actually IPO'd, Figma. I honestly didn't really hear about this company before they IPO'd or even when they IPO'd. I did hear that they have a good platform. I really don't know too much about it, but you can kind of see how that performed over time since they IPO'd. They didn't do too well. But just to kind of put things into perspective and kind of just go over this, right? So Adobe's revenue, is this annual? Yeah. So Adobe's revenue is about $23 billion. And when you go to Figma's, their revenue is not even a billion. Completely different scale. Like it's not even remotely close. I know Adobe was looking to actually acquire Figma a few years ago. It didn't really happen. It kind of fell through. But again, this is absolutely zero threat to Adobe right now. Maybe in long term, maybe 5-10 years, maybe, but near term, not really worried about it at all. But I do want to kind of just go into Adobe's financials and kind of just like touch up on some things. So, why did Adobe really take a fall from those 2021 highs and then kind of never recovered? One, because we kind of know how 2021 went. A lot of companies, were just overpriced, and some never recovered and some did. But Adobe Adobe had really, really nice growth leading up to then. And that's why the stock price performed the way it did. And I think it got out of, I think investors got a little bit more, too optimistic on how this company's growth projectile was looking. So, it kind of pulled back a little bit. But here's the thing. Adobe at the scale that they're still growing double digits, right? Their top line is still growing double digits, right? You look at this chart and you just see it's nothing up but up and to the right. And not only that, we can go to their net income. They're growing their net income still, right? I think I think 2022 was kind of like a not so good of a year, and then 2024 wasn't the best. They still grew, wasn't the best, right? And that's why 2025, it's looking a lot better. Compared to the growth in 2024, right? It's about 30% growth this year, which is outstanding. But you look at this net income chart, right? It's still growing. They just hit their best year in net income, right? So that's just one thing. And then, this is my favorite. If you pay attention and just see like what I look for in stocks, it's free cash flow. Can a business generate cash? It's the most important thing. Adobe 1000% knows how to generate cash. And I mean, this is crazy, right? You're looking at $9.6 billion in free cash flow. They can do anything they want with that cash. And that's kind of going to lead me into my next point on what they're doing with it, right? But look at these margins, right? You're looking at 89% gross margins, 30% profit margin, right? That like 2021, they had 30.55%. Right? They took a little dip. They took some hit on their margins for the last few years, and then now they're back up to 30%. So it kind of just shows that they're turning their business around. They're starting to expand their margins back and get back to like the old Adobe. So I really do like looking at their income statement. It is very, very good. Their balance sheet, they got a lot of cash, right? Nearly $5 billion in cash on hand, which is excellent. And then you kind of look at their total assets. They have a little bit of debt. They have a little bit of debt. It's a lot of debt, right? $6.6 billion. It's definitely a lot of debt, but they have enough assets and they have a lot of cash. They're not going to like default on their debt. They generate enough cash to not have to worry about that. So nothing really to worry about there. I think this is a pretty normal balance sheet when you look at a company at this size. So there's really nothing to worry about there. Um, but what they're doing with that cash and something they've really been doing um, for the past few couple years, their buyback yield. So right now they're about a little above 8% buyback yield. So what that means, right, is the buyback yield is the money that they're putting towards buying back their shares relative to the percentage of like their market cap. So what I mean by that is, let's just say Adobe's market cap is 138 billion. So they spent $10 billion worth of share buyback. So 8% of 138 billion, I think I did the math before this, it's like $10 billion, right? So that's kind of what it means, like 8% of the total market cap of what the company's worth. So that's kind of what that means. Don't let it confuse you, but 8% is really high, and that kind of shows that the management, and they even said this, they're very confident in how undervalued their company is, and that's why they're buying a ton of shares. They're doing a ton of buybacks, and they still have a lot more money left to finish out their buyback program. It's in this earnings somewhere. I don't know what happened to this. Disappeared on me. There we go. It might be in this one, or it might be in the other one. But if there was saying something about how many. Yeah, there was something in here that said something about how much money they have left in their share buyback program. And then this is the last one, kind of like a ratio that I was looking at, is their enterprise value to sales ratio. So most of the time, a lot of people, they like to use what's called, where is it? I know it's in here somewhere. Financials, here it is, ratios. So regular price to sales ratio, even though like that's at an all-time low, the price to sales ratio, it's fine to use. The problem is that it only really looks at like market cap. It doesn't really look at like the actual enterprise value, what the company's actually worth, like in terms of cash and debt, right? So like if a company goes to acquire another company, right, they're going to take on their debt, they're going to take on all their cash, all their assets that they have. So the enterprise value is really how much a company's worth on paper. So that's why I like to rather use the enterprise value to sales. But either way, their enterprise value to sales ratio is at a 10-year low. This doesn't go all the way back. I don't have the subscription for it to go like back when they first IPO'd. So I can't see all the way back, but over the last 10 years, they're at literally the lowest point. So the market is discounting them a little bit. And again, I don't know why, because you look at their metrics, and I know a lot of people like forward PE. Here's their forward PE. It's about 14.5, which is very cheap in my opinion, especially where Adobe's been trading at over the years. They've been relatively high. So, but looking at like their actual income statement, the market is definitely discounting it. And just lastly, just to touch up on how AI is going to take over their business, I'm not buying it, right? Right here, the first sentence, this is going from their last earnings. Adobe is the leader in the AI creative applications category, with AI influence annual recurring revenue surpassing 5 billion and AI first ARR already exceeding their 250 million year-end target. So a couple things here. So the AI influence annual recurring revenue surpassing 5 billion, that's kind of like all of their products, and just talking about all of it, their annual recurring revenue passing 5 billion. The AI first annual recurring revenue, to my understanding, are the new products that they kind of launched. So Adobe Firefly, they recently launched that, and that's more just AI oriented, and they have a portfolio of other products that are really like new and focused solely on AI. That already exceeded $250 million, right? It's insane. And that kind of just shows you like how much of an influence they have on the creative industry, right? People they love Adobe's products, and the fact that a company can launch a new product, new software, and then roll it out and already surpass 250 million in annual recurring revenue is pretty nuts. So I'm not buying it, right? People clearly are still using their products, and we can go through the earnings report, and they keep like this company's still growing by double digits, right? This isn't a company that's dying and they're in the low single digits, mid single digits, or even slowing down their growth. They're only going up, and they're only expected to grow, right? You can even see like they raised their full year 2025 digital media ARR growth, total revenue, and EPS targets. Now, one thing I also do want to say, just because Adobe is doing share buybacks doesn't mean that this is automatically going to raise like the stock price. A lot of people think like that's what it automatically means. So if you don't know really how it works, right? Share buybacks means that there's less shares in circulation. So earnings per share, right? When you have a higher earnings per share, that generally means a company is more profitable. And if the stock price isn't going up, then it may look undervalued. So the way EPS works, it's your net income, so how much money, how much profits a company's making, and then that's divided by the shares outstanding, right? So if net income stays the same, and then there's less shares outstanding, right, your earnings per share is going to go up. A lot of people think like, or there's a lot of people say, there's financial engineering that companies do, so it kind of like makes it look like their profits are going up, but the actual business itself isn't actually getting better. Some people think that's the case on what Adobe's doing. I disagree. I think their business is still getting better, and you can kind of just see in the numbers. So that's just how earnings per share works with share buybacks. Doesn't necessarily automatically mean it's going to go up, but in this case, they're buying a ton back, and I think investors will be happy over the next year on how this company performs. But again, digital media segment still growing double digits. Digital experience segment is 9% year over year, smaller portion of their business. That's okay. And then their digital experience subscription revenue did grow by double digits. So subscription revenue, I think, is more important than the actual just business revenue segment itself. But again, we can kind of just go over. I think it's in this one. It might be in this one actually, where it was just kind of just going over like subscriptions. And oh yeah, this is also another thing that I wanted to talk about. A lot of people think they can't just integrate other companies' products and models into their products, and that's exactly what they're doing. So you can kind of see that they added Google Gemini, Flash 2.0, along with their video creation into their products as well. So I saw something that the CEO said that Adobe can literally take any AI product, so like any product by like OpenAI, Google, they can literally take their products and integrate it into their products, making it just a stronger basket and portfolio of products for their customers. And that's the thing. It's like it doesn't matter. They have the user base already. They have people that know the Adobe brand. And if they can keep up with all of the AI and all of these new and upcoming like good software and good applications, then why would people leave Adobe? It's just not going to happen. So that is the kind of the last thing that I wanted to go. But you can see here, right? Like our Workfront frame, AEM assets, Firefly services all exceed $1 billion in ARR, growing over 25% year over year. I'm not going to go through this whole document, but you can see that there are a lot of things that are growing in double digits, even over 25% year over year. So again, just there's narratives out there that say that AI is going to take Adobe over. But when you look at the actual numbers that they are putting up, the story is completely different. So don't let narratives kind of just like dictate what's going on with the company. Dig into their earnings, do the research, and you'll actually see what's happening in specific industries, sectors, and with specific companies. But that's pretty much all I have. That is kind of like my Adobe bull case and kind of just some analysis on what I see for now. But I think this company has a lot of potential in the next 12 months. But let me know if you agree with me. Maybe you don't agree with me, but let me know in the comments, and I'll see you in the next video.